Hello everyone, this is your weekly review for the week of November 1st to 5th. It was a decent week. I think in my review I left a little bit on the table, but about an 11-hour week, maybe a little bit more. And yeah, overall pretty good movement. Volatility is increasing a little bit compared to what we were seeing in October. We saw a little bit more in September, October. So that's, good to see. More movement generally means more opportunities. More trending movement's going to mean, it's easier for us to hit those 2.5 to 1 reward to risk targets and potentially even make a little bit more on some of those profit targets. So there's the actual number when we add them all up based on the charts, 11.67R. Average trading time, that was about an hour and 40 minutes of trading on average for the week. Win rate 7 out of 10, a little bit higher than normal, but we had some stronger moves. I was also, as I said, I don't want to say hesitant, but I was a little maybe more cautious than I could have been at a couple points during the week. I probably avoided some losers by staying out a few as well. And reward to risk. This, so our trades 2.5 to 1 is usually the minimum I'm going for. But this just goes to show how, even with a couple big ones, if we get out early on a trade and then maybe we, have a little bit bigger loss, this one was a bit of a position sizing mistake, how quickly 2.5 can drop off. Now, this is only like 2 trades really out of the whole week, and it has a really big impact. Now, this is why I tell people, for the most part, especially when you're starting out, let those trades play out unless you get a signal in the opposite direction. Don't try to, think you know where the market's going to go and always get out of trades earlier because this can just drop so quickly. If these losers, instead of 2.5 to 1, start becoming, 2.1, 1.75, and then that becomes the norm, then that reward to risk just really drops off. And if you do have a bigger loss, it's going to drop off even more. So we want to try to keep those wins, kind of up in that 2.5 area. Now, there's definitely going to be times. This was a valid exit on this one. I only ended up with 0.65R, but this was a valid exit because we had a trade going in the opposite direction. So we'll look at that one. But yeah, as much as possible, stay in those trades until you have a valid reason to get out, like a pattern going in the opposite direction. Strategy totals, pretty much all double pumps and rounded tops this week. I haven't been trading this one as much. I haven't been looking for it as much, so there may have been some out there, but I just haven't been seeing it the last couple months and as much, and so my focus has also kind of come off of it, and these have been producing lots. The double pump variations, I missed one this week, and so these are out there for sure. Just didn't end up trading them this week, but those are where the money's been made. Squeeze play, also felt I missed one of these this week. It's not really discussed in the course, but I'll briefly touch on it here. The EURUSD day trading course, that is. So really low movement on Monday. Can't complain about too much here. Sucks getting stopped out by 0.1 pips because we had moved up the drop, try to push to a new high, drop to a new swing low. Nice shift to the downside there. Waited for a little bit more. Did I even know? I got in right on that drop there. So not much of a pullback there either. And, survived that first one, so that was okay. And then tried to go. I think those were matching with my broker. And then tried to go, and then, it just clipped me out. So this ended up being like a double pump. So there was the opportunity to re-enter, but we'd really only moved 5 pips in the last hour and 10 pips in the last couple hours. So it's really hard to, get aggressive because it's so easy when the price is just kind of chopping around in a 5-10 pip range to end up taking 2-3 trades in a row and you just lose all of them. So I didn't feel too bad about this, but there was the opportunity to enter. But since we were well under the 15 pips by this point, that is definitely not a mistake. And I don't even know if that even had enough movement to get to a target anyway. Down here, because we would have been entering there. Yeah, so probably wouldn't have even hit there. So definitely good to stay out. Took the one, and maybe even that, considering could have been a mistake. Target, okay, within kind of where we've been moving in the last couple hours. So that's why I felt more inclined to take this, because the target wasn't outlandish. Like, it was still in this area that we've been trading in. It wasn't expecting some big move or anything. But in this overall movement, in this overall low movement, could have easily stayed out as well. This was a good day. This started out with a really beautiful rounded bottom. This is pretty much picture perfect in the sense that we have the drop, another drop. This is the transition we're looking for. This is the classic rounded bottom because we move straight into a higher swing high. We'll look at the next one, slight variation. We discussed this in prior reviews. Then the pullback, first transition right there, get in, easily hit. Had to hold through a little bit of junk here for sure, but no reason to get out. At no point did we make a shift or a reversal to the downside. So very, good movement. Just kind of a little more choppy to the upside, but that's okay. And then here, we moved above all these highs here, just took them out, stayed there for a couple minutes, hard drop in, and then we make a swing low below. If you go back, there's a review video that talks about breakouts, false breakouts, magnet areas, and this is kind of the thing we're looking for, the drop back in, and then we get a swing inside the old range. That helps us. It's not going to work all the time, but it at least gives us quite a bit more probability on our side that that was a false breakout. And came right back in, started the transition to the downside, took the short. So this one, it depends on which kind of swing low you use. There's a little bit of subjectivity here. We had the swing up. Then you could consider this a pullback because it went all the way up here and came back down here on this price bar, then went up, then made the drop. So here you have a big shift to the downside based on this. Or you could have entered a little bit later by, we had this shift below this one, and you could have entered over here. Now that one was the one I talked about, the variation, because now if you enter over here, you're entering on the third swing down. You had one drop, two drops, three drops. That's going to be a lower probability trade than this one over here, where I know we're talking about this is a bottom and this is a this is a top and this is a bottom, but the concept is the same. I'm entering on the second wave up. This is one wave up, pull back, entering on the second wave up. The later you enter in a trend, the more waves that have moved in your direction, obviously the less likely it can continue to move in that direction. So entering on a second wave is going to be a slightly higher probability trade than entering on a third wave in that direction. In this case, would have worked out just fine entering over here. Could have even entered on the fourth wave over here, and it still would have worked out fine. But that's because we had a nice big trend going. Here was one I feel I missed out on. I didn't count it as a mistake, but yeah, I feel I should have been in this one. Lots of opportunity to go back down toward this magnet area. We weren't too close, so it's not like it's going to act, really attract the price, but pretty nice clean double pump here, and then we just but I wouldn't have entered here just because of that price bar, huge. So not a great trigger bar, but once we get all these, and then we get that, we're just waiting for that shift to the downside. This was a pretty decent one to get into. Especially after this false breakout and the magnet area. So it's like those little probabilities stacked up in our favor. Did take this one, kind of a similar trade to up here, the drop, move back up, drop back to the lows, tries to get back up there, and we just get that shift back down. Same opportunity here, double pump, that one didn't work out. And once that failed, we have basically a rounded bottom playing out where, you know, we tried to push lower, that didn't work. We have the move back up to the high. We're expecting it to roll over, and it doesn't, and it pushes back up to that high. We even had a little consolidation there, and then a breakout. So, yeah, opportunity there as well for the reversal. Nice one here, little push up there, move to a new swing high, get in, easy money on that one. Here's the example, lower probability trade we've made. You know, we don't take out the swing lows till we've had 2 drops. So entering over here, you know, a little lower probability would have worked out in this case. We've also, this one would have been a little conflicting to get into because we've just had a drop, and now this up wave has been erased by this wave. We actually edged above it a bit. So that would almost look like a transition to the upside, but there was no trigger to go long. Nice false breakout. The main compelling thing about this was the hard sell-off here. Big pattern, conservative, play conservatively on the downtrend. So I was basically looking at this as, you know, we'd had the drop, this had moved above that swing high, so if we drop down here and then start to turn up, it's not a great rounded bottom, so I wasn't too interested in taking the long, but at least we're getting out of the short, because to me this was a little bit in conflict of whether this was a double pump with a false breakout, or if this was an actual shift up where you're going to have a little pullback and then a move up, or the double pump and we just sell off. So sometimes we don't know. I talk about this in the EURUSD day trading course. There's going to be conflicts, and we kind of either have to decide on an approach and go with it, or, you know, we can take the first signal that comes up, in this case taking the short, and then, you know, if we want to change, if that doesn't work out, if the price action isn't confirming that bias or that trade that we took, then we can consider getting out. So this one, I was in conflict, so I just said, you know, be conservative with it. And once it started to drop, move the stop loss down. So basically I was expecting this to sell off. Not expecting it, but I wanted it to sell off quickly, and if it didn't, if it stalled out and then started to move up, I was getting out. And that's what I did right there. So aggressive trailing stop loss just moves above the candle highs if you're short. So basically, as soon as the price moves above a prior candle high, you get out. Again, just rounded bottom coming in here. Nice little small price bar in there. Great entry. Ran really hard up into this high. Was looking for a rounded top. Really unfortunate again. Another one that stopped out by about 0.1 pips. There were a couple of those this week. And we had this nice run up. This was a really, you know, aggressive sell-off in here. Definitely different than any of the pullbacks we'd seen during the uptrend. So I'm a little upset with myself that I got shaken out of my overall context and didn't re-enter this one. I'm not going to call it a mistake because it was more an advanced trade. It wasn't like just a perfect pattern sitting there. This was definitely more of a context trade. This was a nice pattern. Take the short, but once that didn't work out, yeah, I kind of started questioning, okay, are we going up, are we going down, as opposed to my overall bias, which was this was a hard sell-off. These are pretty weak moves to the upside, and, you know, look for that other opportunity to get short. And Friday, I didn't take anything. This is like a squeeze play trade. So when you have a series of highs, and it's basically like, if you're going to go long, it's like an ascending triangle. So you have your resistance area up here, and then the lows are getting squeezed in, and you're getting wedged in there, and it's going to go one way or the other. I prefer going in the direction, so in this case it's angling up, and we have the potential to move up. It's not a squeeze play usually occurs, or at least I trade them near a major high or low. So if this would have occurred up here, that would have been a little bit more compelling to me. Just kind of in the middle here, I wasn't super interested in it, but there was that opportunity. Some people also viewed this as a rounded bottom, where we have the drop, can't really go anywhere, and then a higher swing high here, so going long in this area here. So that would have worked out in this case, but again, it's that lower probability trade, and we didn't have any slowdown on the side here, which is kind of what we're usually looking for, but we did have this drop, which doesn't go anywhere, the higher swing high. So again, these are just a little bit lower probability trades, but in this case would have worked out very well because we had some evidence of the false breakout, which is going to help push our bias to the long side. So really big false breakout. Look at this. This was discussed in that breakout video. I also showed another example earlier in this video. Moves below that swing low, moves back in, and then has a swing low inside. That helps us confirm that this is a false breakout. If this had come all the way back out here, that's a different story. Now that breakout's still in conflict. I'm not sure which way we're going to go. But once you have that breakout and then you start making waves back inside the old range, you have a pretty high probability that you've had a false breakout. So there were some opportunities in here, maybe on this false breakout trade, or potentially this rounded bottom, or even on the squeeze play once we got in here and made that shift up. There was a little rounded top in here, push, pull back, tries to push to a new high. This one pretty much matched exactly this little swing low. So very tiny pattern. Also a false breakout, moved above it. Now we're, made a couple of pushes inside. So this one was one I feel like should have been in. I'm not too upset about it because it wasn't a great pattern, but given the context of a little bit of a false breakout there, now we're trading back inside the old range. This was definitely one could have added another 2.5 to the week. And looking at the bigger pattern here, move up, pull back. Once we got this shift to the downside, like right about here, we made this lower swing low. If we had had a little pullback there, that would have also been a really nice one to get short, but instead it just fell right away. Almost a rounded bottom here, but we just never got that shift up. Again, that's the lower probability trade. This is the main, our last swing low heading into the bottom. This one doesn't get there. We do have a pullback there, and then this one makes the higher swing high, right? So if you're entering here, you're getting in on the third wave. We've had one wave up, two waves up. If you get in there, third wave up. Lower probability. This is kind of in no man's land here. Don't have really any other evidence to suggest we should get into this. No false breakouts. This was a pretty strong move down compared to the last one. They look about the same to me. So we haven't really lost any momentum to the downside. So this is, one of those lower probability trades where I would just opt not to get into it. I have no focus for the upcoming week. I'm just taking the weekend off, going to relax, and a stress-free mind does wonders for your trading. So, we're always talking about how to improve, how to make our focus on our strengths, how to become better traders. But every once in a while, too, you just got to, relax, enjoy what you've done, and, keep it fun so that it's not always, relentless work. So that's the review for this week. Until next week, happy trading.